Hello, my name's Mark, and you're listening to Resource Talks. In this episode, I'm joined by Michael DiRienzo, who is the Executive Director and Secretary of the Silver Institute. The Silver Institute is a non-profit international association with members that run the gamut from metal miners to bullion suppliers and silver refiners. Michael's going to talk to us about the Silver Institute's World Silver Survey 2023, which was released in April. So not exactly hot off the press, but lukewarm at least. This conversation will be general and impersonal. Neither Michael nor I know you or your financial situation, and we certainly don't know what will happen in the future. So take everything you hear with a pinch of salt and do more research before taking any decisions with your money. With that said, Michael, thanks for coming on the show.
I appreciate it, Mark. I really do. Thank you.
This year's World Silver Survey kicks off saying that 2022 saw the largest deficit between supply and demand on record, and yet professional investors were indifferent or bearish for much of the year. So to put some numbers on it, demand rose by 18% year on year in 2022, while supply was flat, and yet the price in dollars fell by 14%. So how do you explain that?
Well, it's hard. It's hard to explain. I mean, I'll be honest with you. Even some of the analytical professionals in the silver world cannot figure out why that happened and why it continues to happen. We know one thing for certain. We knew it wasn't because of retail investors. Okay, retail investors were quite strong last year. We had a record year of retail investment, over 332 million ounces, and that's to say, of coins and bars. So you then have to look at the institutional side, right? And while it was somewhat strong at the beginning of 2022, after the invasion of Russia into Ukraine, that sort of supported the gold and silver prices for a while, but it quickly fell off as the year progressed, and we're still seeing that today. So on the institutional side, it was a weaker performance, yet we think that that will pick up over time, but there are many factors, of course. Interest rates, fears of recession, and so forth could impact the silver price and the gold price as well. So, yes, it was somewhat disappointing that the average silver price last year was $21.73, whereas the year before it was $25.14, and I believe it was somewhat higher even in 2020 with the advent of COVID. But we think that the supply and demand scenario as we move our way through 2023 is somewhat favorable for silver.
I was interested to read that as you just suggested, in 2022, there was strong bar and coin purchases by retail investors who were presumably worried about inflation. But at the same time, institutional investors did the exact opposite, reducing their precious metal holdings because interest rate rises increased the opportunity cost of holding zero yielding assets. So who's the dumb money in this case, retail or hedge funds? Because they can't both be right.
You're right. When making a bet, there always has to be a counterparty, right? Someone has to take that risk off the other party's hands. So we're betting that the institutional side will come back. We've got data even through the first 3 or 4 months of this year that U.S. retail demand remains very, very strong. And that's been characterized by the high premiums we see in the market on coins and bars. It's a sharp contrast to what we're seeing in Europe. And that's primarily due to Germany. Germany has traditionally been a huge retail silver investment hub. And the enacting of a new sales tax has driven down retail investment, a VAT tax per se, in that country quite remarkably. So that leads us to the institutional side, and we're not seeing a huge push there so far. So I think if you had to say who let us down, it would be the institutional investor.
Let's go back to the biggest deficit on record, because that's really the headline, and the gap between demand and supply was 238 million ounces in 2022. But to put that into perspective, London vaulted stocks alone make up around 800 million ounces. And for most of the past decade, the market was in a structural surplus. So is it fair to say that really there's no prospect of global stockpiles being, drawn down anytime soon?
I don't think they will. And I think most analysts who are being wise and smart and telling you the truth think that that's probably the case. Look, we're calling for a third annual deficit in 2023. It'll be somewhat shorter, by about 140 million ounces. But that'll be the first time in a long time that we've had 3 consecutive years of a market deficit. We think global demand is still going to be very high this year, and we can get into the particulars a little bit later on. And mine supply is expected to tick up just a skosh, maybe 1%, maybe 2% at most. And that's really primarily due to some of these projects that have been waylaid, a couple new projects that are coming online. I noted that Fresnillo and Mag Silver, who on a Scipio project, recently achieved commercial production just on the first of this month. So that's going to add a little bit of more supply to the market. But then geopolitically, what are we seeing in Peru and Chile and some of these other countries? We'll just have to wait until our November update on the survey to see where we stand for this year.
Yeah, I mean, I think the big news item last year was the social unrest issues in Peru, no? And
yes,
I think you said there's an 8.5 million ounce reduction in the silver output last year, which was around 1% of total mining supply. But at the same time, Mexico, Argentina, and Russia all increased their output, so it sort of netted out. Do you have, though, moving aside from the kind of noise of short-term comings and goings, do you have a big picture view of how silver mining supply could evolve over the next decade? Because people talk about underinvestment in mining in general. Does that apply to silver?
Well, one of the characteristics of this market versus the last time silver almost hit $50 an ounce, and I believe that was 2011 or 12, is that the miners are being quite frugal with their money. Their cash costs are lower in comparison to other precious metal mining activities. They all want to be in business for a long time. They are all looking for the next strike, mostly off of existing properties, correct? You're seeing some consolidation in the gold market. You're seeing some consolidation in the silver market. And interestingly, you're seeing some silver players getting into the gold side of the business in recent months. So yes, it could be a factor, but the underlying issue, Mark, as we move through the greenification of the world and work to become less reliant on fossil fuel oils, is silver's use in these highly developed and popular end uses, such as solar panels, such as photovoltaics. We're putting out a report in the next month or so on a real deep dive into silver's use in solar with a forecast out to 2050, PV. And we're also going to take a look at wind power, and we're also going to take a look at nuclear power. What's silver's role in those two applications? So yes, there will be more silver required as we move down the road. And the question is that drawn down from above ground stocks or a new supply of silver from mining sites?
Yeah, I was going to bring that up actually. Of course, photovoltaic cells is maybe the sexiest application of silver nowadays. And I saw in the report that demand for silver in these solar panel cells went from 48 million ounces in 2014 to 140 in 2022. So that's a 200% increase. And in fact, total industrial demand has gone up by 30% since 2014. And, that makes sense because we keep hearing, don't we, about all these increasingly high-tech uses for silver, like the ones you mentioned as well, and healthcare technologies too, I would add to that. But so do you think, though, that these developments could cause silver's price to start acting more like a base metal than a precious metal? And if that were the case,
well,
would it make it less of a safe haven asset and more of a bet on economic growth like copper or steel?
Well, look, silver, let's face facts. Silver is an industrial metal. When you look at the supply or when you look at the demand characteristics, over 50% goes into industrial applications. And that includes photovoltaics, brazing, and even photography, which is a separate category. And then you have jewelry and silverware as well, okay? And then you have the investment side of the demand equation. So, yeah, I do think that silver will be viewed, and some investors look at both those characteristics as a precious metal and an industrial metal. I know there are those that just look at either one of those factors to determine whether or not they're buying or selling. If you're buying on behalf of or with the belief of industrial demand going further and silver being incorporated into more and more applications, that's probably a pretty safe bet. With respect to safe haven status, it's not like gold. It's not held by central banks. It's not stored and bought by central banks. This is, somewhat institutional again, and retail investors. But one of the things that we need to pay attention to, in my opinion, is silver's scope with respect to exchange traded products, which is we had a small decrease last year in ETPs. But let's face it, these only came on the market in 2006 for silver, and they've been quite popular. And our World Silver Survey has a whole chapter on investment, and I encourage your readers to look at that that section closely.
So you mean people sort of buying silver virtually online instead of buying physical coins?
Well, exactly. So they're going into the paper side of the equation, right? The ETP, by its very nature, trades like a mutual fund. There are very popular products on the market: the SLV, the PSLV, Wisdom Tree, and others that have sort of dominated the market over the years. But one thing that we've left off this discussion so far is India, and India was a huge player in last year's silver market. They were number one in jewelry and silverware. They were number one in investment demand. We put out a report earlier this year that you can find on our website under publications on the Indian silver investment market. And they are looking at digital silver. They have an ETP on the market, which is actually expanded in millions of ounces more than their gold ETP, which was actually issued a few years prior. So look, India is a huge player. And I think once the institutional side comes around on silver, we could see a much more attractive silver price.
I know that, because I'm from the UK, I've got that sort of perspective that the Royal Mint in the UK launched a sort of digital service where you could buy fractional amounts of gold and silver through their platform. But it's, if you really look into it, it's so unattractive because you end up paying sales tax and it's not sort of like these Roth IRAs, or they're called stocks and shares ISAs in the UK. You don't have any tax wrapper around it. So really, as an investment vehicle, it's not attractive at all.
Well, look at it this way. There's going to be premiums involved on the retail side. There are certain transactions and other forms of silver investment. And in the United States, for example, silver is and gold and platinum and palladium, for that matter, precious metals are treated like a collectible in the tax code. Even if you buy a mass-produced gold bar or a silver bar, and you hold that for as long as you want, you're still subject to a capital gains tax. So it's not treated accordingly. Whereas in the other section of the IRS code, exchange traded products and other entities that hold silver are given the preferential tax treatment. So there's miscues in our code in the United States, and there are miscues in other countries' approach to gold and silver investment. And until those are changed and we get on one level playing field, it's going to be challenging when one goes to take a profit from gold and silver.
Yeah, I just wonder to what extent its properties as an investment vehicle will be diminished the more it becomes used in industry. Because
I don't think that to be the case. I mean, since I've been here, and that's a number of years, silver has always on the demand side been either at 50%, 52%, 53, maybe a 49 1 year or so. But even so, when you look at the price back in the early 2000s of $4 and $5 an ounce, and that was sort of at the heyday of silver's use in photography, for example, which was its primary industrial use at the time. And with the advent of digital cameras and so forth, and digital, your phones, and people are taking snaps, not so much these days, other than hobbyists and real enthusiasts for traditional silver halide photography. That number has come down dramatically, whereas the industrial side of the equation has remained pretty much the same. So
what about all these green technologies that you're mentioning, and if it becomes increasingly used in those kinds of industrial applications, maybe its correlation with gold will diminish, and in that sense it won't be seen as kind of a bet against the stock market anymore, or a bet against inflation, because if stock market crashes and we go into recession, then that would pull
Correct.
silver down as well, wouldn't it? Because then demand for it and all these
industrial
applications would fall.
Well, and that's a good point. I mean, look, if we head into a recession, what is that going to mean for the industrial side of the equation? So far, the predictions of a recession have not come to fruition. And I think that's globally at this point. There may be certain pockets where economic activity is being impacted. But a lot of it has to do with the U.S. Fed, as you know. If they pause rates in June, I think that's going to be a positive sign for silver and gold. If they do go ahead and raise the up by a percentage point or a quarter point, whatever they're planning on doing, that could have an impact on the silver price. And that's kind of just the way it's been for the last several years. I mean, up until when COVID hit, they were cutting like crazy and funding. Not I want to say the markets, but there were all these stimulus bills. Consumers were receiving basically free money, and that has come to an end.
So silver, of course, also used in jewelry to make things sort of shiny, a lot easier to understand than these photovoltaic cells and all these other applications. That makes up about 1/5 of total demand in 2022, at least. But a narrative that I've heard is that young people don't buy watches and necklaces and rings like their parents and grandparents' generation did, and that they prefer to spend their cash, getting a selfie on a beach in Thailand or something,
right,
more experiential. So is that going to be a headwind for silver going forwards, according to your
Well,
sort of analysis?
that's interesting. We put out a survey at the beginning of this year where we looked at just U.S. retailers, and the biggest demographic of those buying silver jewelry were millennials in 2022. And we put out a pretty comprehensive report on the jewelry market last year, which also talks about the five various classes. So whether it be the Gen X, Gen Y, whether it be the baby boomers or those who are somewhat older than the baby boomers, who's buying the most jewelry. And again, it is the younger demographic. So your question could be construed as, yeah, that could be a problem down the road. But silver jewelry sales, last year was a record year, again, primarily due to India. We'll just have to see how this year plays out and going forward.
Was that survey focused on Americans?
Yes, it was U.S. It was U.S. retailers.
And that was specifically silver jewelry. So could it be that maybe young people can't afford gold jewelry?
Well, that's always been the case, right? So people want to buy a nice piece of jewelry. They can get into the silver side at a much lower price point, correct? So that's always been the challenge with gold, given its higher price. But, there was just a show in Las Vegas, and silver jewelry, I did not attend, was quite popular. And the retailers are still focusing heavily on the silver side of their market. And I don't see that diminishing for quite some time.
So you mentioned that India sort of sustained the jewelry market last year. And I think, just to put a number on it, their silver jewelry demand went up 100% last year. So I guess that sort of shows that when we talk about jewelry not being popular anymore, I guess we have a very myopic view just looking at the US or the UK. And what about in these Asian markets? What's going on there with jewelry then?
I don't have an exact answer for that. I have not. I'm sure that's included in our World Silver Survey. With jewelry not being the primary story of last year, I don't have that information. I do have this. I can tell you that Indian demand has picked up modestly in the month of May. And that's primarily due to the ongoing wedding season. And what we're seeing in China, for example, there was a pause in April, but the Shanghai Futures Exchange silver inventories recorded a very sizable drop of 317 tons in May. And those top 20 participants in the SHFE, that for the silver contracts, that implies substantial buying. And one of the areas this is being directed toward is PV offtake. And that's really being built up by the supply chain's desire to build inventory during some of these lower price periods. I don't have an answer for you with respect to Asian jewelry at the moment.
I don't know if you've heard of these kind of online forums like Wall Street Silver on Reddit.
Sure.
Where you have. Okay, where people are very, very bullish on silver now, and they share lots of memes about their silver taking them to the moon. And that was sort of what I was expecting when I booked an interview with the Silver Institute. But then, I read your report, and you say that you see the silver price closing 2% lower by the end of this year. So I guess silver's not going to be taking us to the moon anytime soon.
I can't predict that, and you can't predict that. Okay, so this is just all speculation. We are very passionate behind those Wall Street Silver members. They took the price up almost $3 to $4 a few years ago in the month of January and early February, and they are true believers in the white metal, and they're on our side, and we're on their side. So, look at investing prices and so forth. It doesn't always go your way. But what I was trying to allude to earlier about the $5, $4 average silver price way back in the early 2000s, and even before that, it was lower for the longest period of time, going back through 1950, is that silver is an attractive price right now, but there's a lot more room for it to run. We think there's a lot more room for the silver price to grow. And we are looking forward to it taking off once again.
But you don't think that will happen this year because you're sort of predicting liquidations and sort of some kind of credit crunch?
Well, look, I mean, like we said, coin and bar demand is quite strong. We think there are some pressure factors that could hit the market in the second half. Whether they are carried into the first half of 2024, I don't know. The price outlook is in our World Silver Survey. That's been bumped up a bit by our team at Metals Focus, who provide this data and analysis to us, only slightly. And I'd have to look to see exactly what that number was. I believe they put it up to, bear with me 1 second here. Yeah, they're at, I think it's 23.30 now. So that's $2 higher than what was indicated in our World Silver Survey. And to many people, that did not like that number. And quite frankly, that's not where you really want to be. But if you look at the 30 analysts who went onto the LBMA, that were surveyed by the LBMA, it's really in the center of the average price that the 30 largest or biggest analysts in the gold and silver markets came forward. I think there was a high of 32, and then I think there was a low of $15, which was a little bit ridiculous. But I think the median price, the average price, bear with me. Let's see here. Yes, their forecast right here. So with respect to, because this is always interesting, because I always like to look to see, and they put a name behind every forecast. So for silver, you're looking at, according to these analysts, an average price of about $23.65 for this year, the high of $35 and a low of $14.70. And they, like I said, they put names behind these predictions or these forecasts. And quite frankly, there are bears of the market, and they've always traditionally been bears. And then there are those that are more bullish. So we'll have to see how the year ends. In order to get to a $28, $29 average, of course, we're going to have to see $33, $34, $35 silver this year. And I don't have a crystal ball, and I don't want to look that far into the future, but I do think it's an attractive time to purchase silver at this price.
And what are the catalysts that are going to push the price up? Because we've said that the stockpiles of silver out there are just massive because we've had like almost a decade of being in surplus. So what's going to push the price forward?
When you go to our World Silver Survey, for example, and you look at the drawdown of above ground stocks, and I know you've done that, so that's identifiable silver bullion inventories. They came down 23% last year, okay, year on year from 2021 to 2022. And as I mentioned earlier, with respect to China, you're seeing that there as well. You're seeing that more on the industrial side. I think somewhat for jewelry and other manufacturers of silver-based products. But quite frankly, the price is reflected into these inventories, these stocks. Analysts and investors look very, very closely at the gold-silver ratio, for example, and make decisions based on it sometimes. Others look at have a more well-rounded idea of where the silver price is going, and whether that be up or north. But the inventories do play, and the stockpiles do play a big role. In the United States, we no longer have a silver stockpile. Our stockpile has been drawn down to zero, essentially. Okay. And it was done primarily after the advent of the American Eagle silver bullion coin. And the silver that was used for it initially came from the stockpile. Now it comes from newly mined U.S. domestic sources. So, coin demand in the United States is rather robust. And you talk to any of the 13 authorized purchasers of bullion coins on the silver side, they're having a hard time farming these coins out to their buyers, who then in turn sell it to their retailers, the individuals, I should say.
You mentioned about the gold to silver ratio, and that's near all-time highs, about 40 ounces of silver to 1 ounce of gold. Do you see that then as being in store for a correction to long-term averages, or really
we do think that number is going to narrow? Okay, right. And I have a chart here that is quite interesting with respect to the ratio itself. We think and we know that ratio, I believe, is at about 84 for Q2 so far, 84.6. If you go back to the fourth quarter of last year, it was 81.3. It rose to 83.9. It came down to 82.8. And then right now, in Q1, it was 83.6, and now we're down to 84.6. So, that's all going to be dependent, obviously, on where the price of both metals go.
And what's the Silver Institute's sort of track record when it comes to forecasting supply and demand price?
We don't forecast. Okay, the Metals Focus does on our behalf,
right?
In our report. Okay, yeah. So you'll never hear me say I predict this price, or I predict you, or whatever. We think our analysts and the team at Metals Focus that has a bench depth of about 30 people across the world in 7 different offices, who are on the ground every day talking to end users, miners, attending conferences and so forth. And they're face to face with these people. These are meetings with the refineries, meetings with the miners, meetings with the coin dealers worldwide. We are more than comfortable with the numbers they put out for us. And it's the same way you see with the World Gold Council, okay? If you look at them, for example, rarely will you see them come out front and say, we think this is where the number is going to be. But in our World Silver Survey, there are price predictions, okay? Just the market wants it, and we give it. So,
yeah. And of course, well, no matter how good your information is, you just can't predict these big exogenous shocks that we've had, like COVID or the war in the Ukraine. So it's very difficult, isn't it, to make a prediction?
It's very hard. It's very, very hard. We were talking a little bit earlier about certain geopolitical issues that confront all commodities, that confront all economies. And it's very tricky out there these days. I mean, if you look at South America, for example, while Peru is making somewhat of a recovery with respect to its mining side, there are certain companies that are still challenged in Peru. You look at Mexico, for example, which just really revamped its mining law and reformed it to how do I say this delicately? A better side of what was initially proposed through negotiations with the miners and end users and so forth. But nonetheless, still, it poses a problem. I think they took it from 30 to 15 years, which was better than 2. With respect to the concessions, and so these issues are not going away. We're hearing grumblings in Chile, for example. It's ironic that these traditional rich mining countries, that there are certain factions within governments that want to impose higher fees and so forth on these miners, given the fact that they create so many jobs and infrastructure and hospitals and water supply, and they do it in a rather sustainable manner. So it's quite interesting to see that this continue. You know, in the United States, we have mining law reform has always been an issue when you're mining on federal lands, which is where most of the mining activity takes place in Nevada, for example. And permitting is the number one issue here in the United States. You know, you can stumble across a gold or silver bar on federal lands, and it could take you up to 11 years to get the proper permits to begin mining. And that's a struggle. And it's not just a struggle for commodities like gold and silver, but also for oil and other resources.
Michael, thanks so much for coming on the show to talk to us about this year's World Silver Report. It's an incredibly detailed piece of work and totally free to download from silverinstitute.org. And it's got, you know, loads and loads of charts and data in there that complement the analysis. You know, I thought it was funny actually that in one of the appendices, it shows that the UK Royal Mint exported 68 million ounces of silver bullion to Canada in 2022, but only 5 million to the US. So I guess that Americans aren't as enthusiastic about having coins with a British monarch's head stamped on it.
Maybe not. Maybe not so. But I go back to what we said earlier. The source of the metal for the U.S. Mint, for example, by law, indicates that it needs to come from newly mined domestic sources. So that could be one of the reasons. You know, one of the things we don't really get into in the report is commemorative coinage. And I've been having a lot of discussions with the Royal Canadian Mint, the British Royal Mint, the Austrian Mint, and so forth, to talk about the amount of silver that's going into their commemorative programs, not so much the official coins of the realm, like the American Eagle. And we're going to be doing a webinar later this year with the mint directors from those three mints, talking about commemorative coinage, and I'm sure there'll be some slippage into bullion coins as well. But it'll be very interesting to get their perspective on their particular activities and the market on the whole.
I think in the case of these commemorative coins, it is sort of fair to treat them as collectibles because the markups on them are so huge.
It's incredible.
And they're really
You're absolutely
just little
right.
pictures, aren't they?
You're absolutely right. I mean, a lot of these coins are considered to be, collectibles because they're unique, right? They're unlike the bullion coins that are used for investment purposes, which you can actually store through a third-party custodian for purposes of your retirement accounts, at least here in the United States, and I'm assuming in other places across the world. But it is interesting to see, the grading of coins and so forth. And if you go to these coin shows, the amount of money that can be set aside for one particular coin, and that's all judged basically on its rarity, its condition, and they get a certain grade of the coin. And so that is always very interesting to see. We just participated in an event called Coin of the Year program. And it's run through, I believe, Numismatic News or Coin World. I can't remember which one. But nonetheless, it is quite striking to see the beautiful work that's being done in silver. Not so much, just the intricate designs, the designers, it's just amazing across the world what we're seeing today. the uniqueness of some of these coins, or the commemoration of certain events in a country's historical reference point. So I always love participating in that. It's a big part of the market, and silver is obviously being consumed there. So we keep track.
Yeah, of course. Yeah, some of the coins that come out of the Royal Mint in the UK are very pretty, but I would just feel a bit ripped off paying so far above the actual silver
premiums.
price.
The premiums are really through the roof, and it is an issue. You know, with the United States Mint, for example, we've had several discussions with them. We give them market reports. We give them the World Silver Survey. At the beginning of the year, we try to give them an idea of where the market, at least domestically, is going to be. And what we find is that this is not a demand issue. The demand is there. This is a manufacturing issue. Okay, so the U.S. Mint, which itself does not manufacture the blanks, otherwise known as planchettes for the Eagle coin, they outsource that to another mint, local, that's germane to the United States, and they literally are running 24/7, stamping out these blanks. And what we're trying to encourage the U.S. Mint to do, and then it'll have to probably come from Congress, is to put more domestic mints in the pipeline, so this demand can be met. It was a huge issue in 2011 and 2012, and it was an issue in 2008 too. But today, that issue continues, and we've not seen any move to outsource to another mint to stamp these blanks.
Interesting. Michael, is there anything I haven't asked you about that you'd like to mention, relating to the World Silver Report before we wrap up?
Look, I just encourage your users, or your viewers, I should say, your listeners on the podcast to go to our website. From that website, you could sign up at no cost for our bi-monthly silver news, for example, which contains 6, 7, 8, 9, 10 stories every other month on silver. A lot of it is, the whole thing is interesting, but a lot of it is focused on some other aspects of silver that we didn't necessarily touch on today: silver and health, nanotechnology, new uses for silver. You can sign up at the bottom of our website, and you'll get that in your inbox. You'll also get all of our press releases at no cost. Our publications are all online at no cost. I encourage you also, your listeners, to follow us on Twitter, which is @Silver Institute. We've had a rather robust last couple of years in terms of pushing out content on various aspects of the market. And we also do that on our dedicated page on LinkedIn, which is also the Silver Institute. So you can get a flavor and a feeling of what's happening in the market. Not so much, unique little snapshots on the market. So earlier this year, we put one out on the deficit, or earlier this week, we put one out on the Royal Mint. They have a beautiful video on silver and its history, and it's a short 3.5 minute video, but it tells the story. We've been working with the Canadian Mint on getting some of our data on their website. We just did a podcast with the Austrian Mint. So there's a lot of information that we have on our website, which is available to the viewer, the visitor, at no cost. And we're encouraged about the rest of the year. I mentioned we're putting out that report on silver's use in green technologies. We're also putting out a market trend report on factors that determine the silver price. And we're also putting out a report from Oxford Economics on a 5-year outlook for silver industrial demand. So those are some of the reports that your listeners can look forward to down the road. And I just want to say thank you, Mark, for this opportunity. It's been a pleasure.
Fantastic. Very busy publishing schedule coming up. And thank you for coming on the show. And we hope to have you back on when next year's World Silver Report drops.
You can count on the market. I
Thank
look
you.
forward to it. Thank
Cheers.
you.